Hey everybody, this is Tim. I just wanted to put together this quick update here. This is only going to be a couple minutes long probably, but I haven't done an update for a while because I've just been kind of waiting for the market to do something. Today was an interesting day because we started the day down 7 basis points, then we went down to about a negative 12 basis points in the market, the mortgage market. So we had lost some ground there, but we actually finished the day at 13 basis points up. So that's like a 25 basis point turnaround within a day. And so I just wanted to get into that a little bit and go through a little bit of the numbers here. So just so that you can see it on your screen here, I'm just sharing this. This is the market overview showing that we finished the day 13 basis points up on the 30-year bond. So that's exciting news. If you look here, the last 2 days we took a hit early both days, and then we finished a lot higher. Both days we finished just barely above the 50-day moving average, so that's good. Now, we still haven't been able to break back above the 25-day moving average, which is important. If we can break above that, there's a ton of room here, even to get higher than we were at our peak right here. As you know, as the mortgage bond price goes up, mortgage interest rates come down. So that's what we're looking at. That's where we're trying to get to. We want to be above this again. Now this right here, when this happened and we had this huge negative, that was when Jerome Powell opened his mouth, because every time he opens his mouth, we seem to take a hit. So can't wait till he's replaced, in all honesty. But what we're waiting on right now, what's going to make the biggest impact, is going to be the government opening back up. I know there's a lot of political issues surrounding it and what's going on there. Turns out it looks like we closed the government for like 40 days and nothing really happened. Healthcare is going to be the same, et cetera. Everybody's going to take a hit on healthcare. So politically, it doesn't seem like it was great for either party, because the government shutdown just hurt a lot of people without it really changing anything. So anyway, that's that. But the good thing is that once the government does open back up, then we will start getting some of the reports that are missing. We didn't get some of the labor reports and jobs reports and things like that that we normally would have gotten. And it's very important that those reports are able to get released and come out prior to the Fed meeting, which I believe is like December the 10th or something like that. So if those reports come out and they're super negative, then that's going to greatly increase the chances that the Fed will do another rate cut in December. The reason we took this hit back here is because the Fed, after they did the rate cut, this last rate cut in November, Powell came out and said he basically made it seem like a rate cut in December was way less likely. However, if the data comes out, we're able to get data and it shows a very weak labor market and a very weak jobs market, which is what we're expecting based on some of the other numbers. We just got ADP numbers, which look very weak, but they don't have the BLS jobs reports and stuff like that they need. So anyway, if those reports look very weak and if they come out before the December meeting, then I think that greatly would increase the chance of them doing a rate cut in December. They're trying to be completely data dependent on these rate cuts, and if there's no data, they're not going to do anything. So that's kind of how that works. But yeah, I'm excited. Hopefully they get the government reopened here very soon and try to get these reports expedited and out as quickly as possible. The reports may not be as detailed as they have been in the past because they may have to try to rush through them a little bit. But as long as they get some data out, that's going to give the Fed some ammunition to go on for December's meeting, and hopefully that's going to greatly increase the chance of a rate cut. When we took this hit, they were pricing in a 25 basis point rate cut for December, and once it looked much less likely that would happen, they took it away, and that's why the rates went up. So if it looks like they're going to do it again, they'll price the rate cut back in before the rate cut even happens. And so that's what we're looking for, trying to get to rates that were back here and possibly even higher. There's a lot of room here before there's a ceiling that we could hit if we can get above this 25-day moving average and then start heading in that direction. So keep your fingers crossed. Hopefully, we get some good news coming up here within the next week or two, and it starts looking much more likely that we will have a December rate cut. Then that's going to help everybody, I think, who is looking for lower rates, looking to refinance, looking to purchase a house. The lower the rate, the lower the payment, and the better off everybody will be. So that's pretty much it. Hopefully, you have a great rest of your day, and I'll talk to you later. Thanks.